Well, g'day there everybody. I hope you are doing well as we transition into Tuesday's session worth of trade. This is not going to be a pre-market update. As I alluded to a little bit earlier in the Monday recap, I do have 9 individual stocks that I want to sort of oscillate through top to bottom and go through the actual analysis on these individual stocks. This is a short list from a much larger list that I did reference again a number of videos ago. I'm just going to go through these individual stocks. I have also noted and also added both Home Depot and Microsoft into this list. Now, I'm also going to speak about why personally I don't want to trade Microsoft, or at least add it into our top 12 individual trade list. Pardon me. Goldman Sachs is going to be oscillated out of this list, and it will be replaced by one of these 9 stocks. I still haven't really made my mind up as to which it's going to be. However, what is important right now is that, first of all, I apply the analysis and that you get a good grasp of really what I'm looking for moving forward. Okay, there is a lot of trade opportunity in this list. It may not be essentially ready yet. We're going to have to see whether or not the market actually continues to pull back. If it does, a lot of these individual stocks are going to pull back into their respective support areas. So without further ado, I thought I would begin with Alibaba. It is the stock currently on my screen. I will say also that this individual company, it is set to report on, it looks like the 4th of May. This is going to be Friday this week. It's going to be great because potentially it's going to leave us with a trade over the weekend. So it may be something that I speak about over the weekend. Really what I'm paying attention to with Alibaba is really this long-term sort of consolidation that essentially we've been in since August 2017. If you glimpse back to this particular time, you can see it was really the first time that we began to interact with roughly this 170 pivot on my screen. Since doing so, we've had a couple of bounces off from this level, but what's most important is that we have come down on a number of occasions and we have continued to bounce off from this 170 handle. Now, again, depending on what earnings does, this is largely completely random moving forward. But say, for instance, we were to see Alibaba come back down to 170 or potentially even gap up to 190, there is a potential that we are going to be able to buy off from support and trade this about 20 bucks back up into resistance, or vice versa. If we were to see a gap back up to 190, we could very easily fade that gap and also trade it back down to support at 170 as well. We're going to do some risk and reward on this moving forward, but it is rather noteworthy. The reason for that is because we have a very decent oscillation. This is very close to that of a 10% range between the support and the resistance areas that I have already noted. Now, as I continue with this, we have established a peak and all-time high in January 18. We have essentially created the first lower high. However, really Alibaba is just simply moving sideways. If I can bring up these long-term simple moving averages, you can see that price action is very close to the 200. It has just popped its head back on up above this, but it is below the 100. However, the long-term simple moving averages are still referencing that of a bull market, a larger upward trend. So it looks as though if this consolidation is to hold out, if the support area holds at 170, we may not only stop at 190, but we could very quickly retake also that 200 handle as well. This is largely dependent, of course, on whether or not the US markets hold that macro support area very close to the current levels we're trading at. And this is going to be essentially really the nucleus for a lot of these individual trades moving forward. It is very noteworthy. It is something for you to keep an eye on. And also I can very easily say that, look, if we start cracking below roughly this 165 pivot, we have a very decent trade also down to about 150 per share on Alibaba. So I'm really liking this. This is a very nice type of, trading environment, or at least the psychology behind Alibaba. The traders trading it have got a very nice, well-defined sort of chart, and it's a fantastic stock, and also it is incredibly optionable. There is a lot of open interest really dated out to July that I could see in Alibaba. So there is a plentiful supply of options both on the call side and puts, which makes this even more enticing. Alibaba is something that I've personally traded many months ago. It has something that really I haven't taken all that much note on most recently, because there has been a lot of activity in our top 12 trade list along with the broader market indices themselves. But it's looking very nice. So I just wanted to keep you updated on Alibaba. I cannot give you a sort of an entry, or at least on the upside or the downside yet. We have to progress through earnings. Again, as I just said, that's looking to be on Friday, the 4th of May. Now, the second stock on this list is somewhat of a familiar stock. I have spoken about Facebook in the past. At the moment, I'm looking at Facebook actually breaking below the gap support here at 170 closing the gap down to about 162. If we overshoot this gap down to about 156, this could be an absolutely phenomenal area to jump into Facebook. A lot of people will begin to panic on, what will be considered that of a relatively large sell-off. However, what is very important to note is that since 2013, we've had these three decelerating fan lines of the larger bullish trend. And as you can see, very important, this most recent fan line that we're still respecting. This is the extension of the fan line. As we sort of rotated into the beginning of 2017, we tagged it most recently during the sell-off to begin 2018. And as you can see, we've bounced. Now, going back into the daily time frame, the gap, this is post-earnings. So again, if we see this fill, this is that of a bullish sort of continuation gap. To see it fill very soon would be fantastic. And also, it opens up the door to close this larger gap up here at 183. If Facebook, however, just breaks above 179, it's something that I will not be chasing. It's really not worth the risk and reward. It's more so the trade if it comes on back down to about 156, 154, potentially overshoots this open window. I'll be looking at this very nicely, or should say more so bullishly to the upside when we begin to see white candlesticks down at this 155 pivot. All right, so a trade that is coming to us. It's obviously not ready yet, but it is largely contingent and dependent upon this gap filling. If it does happen, it's going to work very nicely in alignment with also Google and a couple of other large tech companies as well, and also the NASDAQ coming back down to, first of all, close the gap here at around 7,020, but potentially coming back down to 6,900 as well. So that's the update on Facebook. Now let me transition also into LUV. You're going to see a pattern continue to set up. Now, this is somewhat similar to Alibaba. We do have a larger range. It does take us back to 2016. However, it does sort of begin to set up in the month of December. So almost 2017. Again, very important. You have to pay attention to support when it sets up to these very important pivot areas. Now, obviously, the market did start out a little bit weak this week, so to speak. It was something that we spoke about over in Pro. Thursday, I believe, we came back down and retested this 51 handle. Now, you might be asking yourself, well, why is 51 so important? Well, again, it is a very important area of support, and it was also a very important area of resistance. Now, generally, when we overshoot to the downside, okay, and we start tagging these macro support areas, what you're going to see is that the fast line of the stochastics, when it registers into these oversold territories, that's when you want to essentially go long at this support area. So if you pay attention to this, when it begins to turn up, that is the signal to go long, and it looks as though we have a pretty decent reward all the way back up here, just shy of $59 per share. So if we continue to see weakness in the markets through Tuesday session today, even into Wednesday or Thursday, and if we are fortunate enough to see LUV coming back down to 51, even potentially lower, it might actually come on back down and tag that 50 handle. If you begin to see white candlesticks down at this area, it's going to be a fantastic trade moving forward. There's the potential for this to rally not only 10%, but more so 15, 16% on the equity. Again, this is contingent on the markets bouncing off from their respective support areas and then eventually turning and running back on up to about 58, 59 to begin with, but ultimately as high as about $60 to close this gap all the way back in the month of March as well. So you can see how, I guess, the nucleus or the blueprint of these trades is somewhat similar, or at least you can begin to maybe establish that of a pattern. But above all else right now, you have to understand that LUV and a lot of these other stocks are consolidating much like the markets. You can very clearly see the pattern to this chart when we are most bearish in terms of market sentiment, especially on this particular company. This is Southwest Airlines. That is the time where you want to be actually accumulating the individual stock or the option. It's almost there. You can see that intraday reversal dating back to earnings. This was on Thursday. You've got that pronounced lower wick. But again, we're still expecting a little bit of weakness in this equity market. It is something to keep your eye on moving forward. Now, let's also continue this into DAL. DAL is something, again, very similar to the previous stocks that I've recapped. What we're looking at the moment is the weekly chart of DAL. We've got differing areas of, I guess, fan lines, you could say. What's most important right now is what we've established since the year 2016, really since June and July. We've created the low, a higher low, another higher low, a higher low, a higher low, a higher low. And here we are once again. I don't know how many this is. It's 4, 8, it looks like 9 almost. high lows in concession. We also have this trend line, which is the extension of those lows that I've just drawn on my screen. And we're also very close to a psychological round number being $50 per share. So if I had to sort of categorize DAL and LUV into, I guess, my preference, it would probably be DAL. This is Delta Airlines as well. If you have a look at the bunch of these stocks anyway, you can see that they're clearly in a symmetrical triangle. You can also begin to sort of see this as well. And very similar to that of actually LUV, you do have another pronounced window, which funnily enough, or interestingly enough, is all the way back up here, just shy of $60 per share. So again, we do have that of a long day type of Morobozu dark candlestick with a shaved bottom as at the close on Monday. If we continue to see this crack below 52, if we see this rally back on down to 51 or 50, not only do we have sort of this trend line, which is potentially holding it up, but we also have a very important area of resistance in the past. You can see December 2016, January, February, which was once resistance and also support, back to resistance, support. And this is sort of going to be X marks the spot. I love these types of trades. It's sort of a confluence of support, and this is also going to sort of correlate with obviously these oscillators moving back down into oversold conditions as well. Then we'll obviously pay attention for white candlesticks, and the trade essentially is going to be out of this green rectangular box to come on all the way back up and to close this open window up here at about $59 per share. So that's what I'm sort of eyeing off on DAL. Again, this is optionable. All of these stocks that I'm going through with you right now are optionable, and you know, just some pretty decent trades. Also, you can see the long-term simple moving averages, although DAL hasn't respected it as nicely as what we would like to right now. However, we are coming very close to that rising 200, which really essentially in retrospect really acts as a form of support mixed with, of course, the trend line and this 50 handle as well. I think DAL, part of me, looks like an exceptional trade moving forward. It's obviously not ready yet, but we have to, of course, see some white candlesticks as well before we can get too really excited about that. Now, if I continue into LOV, this is also a very similar type of trade setup. I'm really liking this for a number of reasons. First of all, if I go to the weekly chart, you can see we are in a definitive trend. The trend is your friend. I want you to understand this. A series of higher lows moving forward and a series of higher highs moving forward indicate that of a textbook bullish trend. And there's no reason to assume that this has changed whatsoever. Also, on top of this is the weekly chart. If you go out and have a look at this, we've had resistance in 2016 at about $79, $80 per share. We got above it ever so briefly in the year 2017. We pulled on back down. We rallied around this, or at least sort of paused around this handle again at 80. Since, I guess, the back end of 2017, the markets have been rather parabolic, and we essentially ran on all the way up to about $110 per share. This has since collapsed back down to $82.43. So a lot of those gains, the majority of those gains, have been given back plus more, and we're sort of moving back into that 80 handle. And this is also in alignment once again with that bullish trend, and also the simple fact that these oscillators are exceptionally oversold. Now, what we don't have is confirmation that the trend has reversed. This is still essentially in a bullish uptrend. However, if you really sort of discount this just like the markets, what we can essentially say is that we have been in a corrective phase, which is largely what, of course, the markets have been in as well. This is since the end of January up here at $108 per share, and really towards the back end of January for the entirety of February into the month of March. Really, since March, we've began to sort of stagnate in terms of the selling strength, and we're really starting to see a couple of bullish candlesticks towards the end of last week. What is happening now in terms of selling, I believe, is going to be the sort of exhaustion to that bullish move, or sorry, to the bearish move as well. So I'm paying attention to this 80 handle. I can, once again, let me just bring up this rectangular box. You can see how sort of X marks the spot for a number of reasons, and it's very important that you do so. It looks as though we're cracking the 200. However, we have done this in the past, but once we see the bounce, we should overtake this very or quite easily as well. And my target on this is going to be up at $96 per share. We do have earnings. This is scheduled for the 23rd of May. So it is, I guess, a little distance away. It's going to be interesting to see whether or not we'll be able to front run this trade. If we are within 1 to 2 weeks of earnings, we're going to have to sort of sit on our hands, and unfortunately this trade is going to have to fall through the cracks. But hopefully we will be able to trade this post earnings if we aren't able to get into it immediately, so to speak. Now, if I bring up PayPal as well, this is very similar. You see how I've got an eye for picking out these types of trades. I want to identify, of course, macro pivots. I want to identify sort of the theme and the setting of the broader markets themselves. I'm not really all that sort of worried or convinced. I'm not so much convinced, I'm not concerned, so to speak, of short-term selling pressure. It's not until we start to crack a lot of this support, and again, you can see just how a lot of these stocks are positioned, quite nicely to at least make new oscillations back up to sort of retest what is, in this particular case, that of a descending triangle as well. So you can see that we're positioned very nicely at the support area. It's aligning with this rising 200 simple moving average as well. And this is also going to work in conjunction with these oscillators coming back down into oversold conditions. We've moved through earnings, which is fantastic. So unlike LOW, you can see earnings. This was actually Wednesday last week. We got an immediate sort of move to the upside. That was sold towards the end of last week, but we're already stabilizing in the face of a relatively weak market on Monday. So I'm liking PayPal. It's at 74.61. If we're fortunate enough to see this come on back down to roughly 72, pay attention to white candlesticks. The target will become this declining resistance area, which is probably going to settle anywhere from about $80 per share down to maybe 78. So we'll see how this plays out. It could be a pretty decent trade. It can happen very, very quickly. It also sort of sits really nicely with that EWZ trade as well, which I'm not going to recap in this video, but I'm still sort of, I guess, firmly paying attention to and following along with as well, even after yesterday's session where it pulled down about 1.8, 1.9% as well. So that's PayPal moving forward. Yes, we are making a series of sort of short-term lower highs. Yes, that can be essentially a textbook reversal, at least a macro reversal. However, if you look at this individual chart, we have no reason, or at least confirmation, that the trend itself has reversed. We will essentially receive confirmation if we begin to crack. I just pushed the wrong tool, but if I can bring up that support and resistance area just here, it's going to be around that 67.11 handle, and obviously that's a long way away from where we're currently trading at. You might actually see that of lower wicks begin to present themselves around that 72.70 buck handle on PayPal. Now, again, I've had a few requests for ABT through emails from a number of people. This is something that actually I used to trade. I look back on this a long time ago. I had lines on this going back to 2010, 2011. I remember trading this a very long time ago. It's since sort of fallen out of, of flavor, so to speak, with me in the world of trading. I honestly haven't really taken any positions in ABT for a number of years, but I'm identifying ranges that I believe are very important for this stock moving forward. Most importantly for now is that of this 56 area. Yes, it looks as though we are going to come on back down to this 56 handle, but if I can bring up once again these longer term simple moving averages, this is a larger correction within that of a bull market advance, much like the broader equity markets as well. So you have to be patient during these transitional phases, during the sideways sort of correctional moves, during the whipsaws. Everyone begins to get frustrated. They sort of throw in the towel and they say, look, the bull market's clearly ended. But really, it just takes a little bit of time for these types of things to sort of resolve themselves back to the upside as well. So if we see this come back down to 55, 56, again, this is going to work in conjunction with those oscillators moving back into oversold conditions. Let me just check. We have obviously moved through earnings. We do have an engulfing candlestick as well, which leads me to believe that, potentially over the next 1 to 2 weeks, we could see this very quickly drop to 56, 55. And then again, these green rectangular boxes are essentially what I'm looking for in terms of white candlesticks, once again, to take us all the way back up to 63, 63.50, 64, 65 sort of area up here. Now is not the time to go long. Now is not the time to go short. I guess confirmation of a trend reversal really isn't going to set itself up until we begin to crack roughly 51. Ideally, probably below that 50 handle, that psychological round number. But I just wanted to update you on ABT. Otherwise, you can obviously throw a trigger about $60 per share. But ideally, we want to be buying down at this support area as opposed to sort of trading a breakout in that of, as at the current juncture, as at Monday, still a relatively weak market as well. So that's going to be ABT. Let me move, or first of all, let me move into Microsoft next, because I've had a few people say, why don't you trade Microsoft? Why don't you add it to your list? Look, I understand it's a great long-term buy and hold sort of stock. It just continues to move up. In the world of trading, however, if you go back and if you actually back test this, again, I used to trade Microsoft a number of years ago. If you just look tentatively sort of at these bullish breakouts, generally what happens is they're sold. So you get the breakout, it pulls back, and then it continues. We establish sort of, another new all-time high, it pulls back. We can essentially break out and really move sideways for a number of months. Really, the way to play Microsoft is to actually buy the dips. And I mean, if you look at this high and you post above it, what happens instead of trending and continuing, it stagnates and then it pulls back. And it's really the buy the dip opportunity off from the rising 50 exponential moving average. So you can see once again, we've got a high here. We broke slightly above it. We pulled back, established a new high, and then we pulled back again. So my experience with this, I got quite frustrated trading Microsoft a number of years ago. That's why I don't like to trade it, or at least I don't look for breakout sort of trend trades on Microsoft. And you know what? I'd rather, personally, I wouldn't really... Personally, I don't like to buy the dip, so to speak, on Microsoft, even though, it can be a very profitable type of trade. It's just not my type of trade that I like to personally place. So that's my reasoning for not wanting to sort of put Microsoft in, or at least add it to the list. I know I've had a couple of comments and also emails about Microsoft too, so I just wanted to do that. And again, most recently, if you look at this, even post earnings, the most recent higher high, what happened? It's been sold once again. So that's just the temperament, so to speak, of Microsoft. And as a trader, you can very easily say, look, it simply doesn't fit my temperament as a trader. And if they don't mix, or if they don't align, there's no point in actually trying to trade the stock. I'm not saying try, but if it doesn't fit sort of your perimeters, your boundaries, or your rules, so to speak, there's no reason to force yourself into actually placing trades on that particular stock. I've sort of unlocked the key to Microsoft. People can do it. I just personally don't like to execute those types of trades off from the 50 for Microsoft. I'd rather trade breakout trades that you can get into and just hold for a number of months, as opposed to sort of speculating on the bounce continuing. So I hope I've made myself clear there on Microsoft. Also, HD, I've had a few people talk about HD. HD was actually something that we have had in our top 12 list in the past. I have since deleted a number of these lines. I haven't actually drawn these lines into HD, but you can see during this period, especially 2015 into 2016 into 2017, it was something that we did trade. We culled it. But you can see again, this was actually a Bollinger Band squeeze a number of weeks ago. It still took roughly 2 months for it to actually break out. It broke out on Thursday last week. There's probably a lot of interest in this. A lot of people probably have this in their 401k accounts. I understand that. It's just, there are options on HD. It just, again, it's not really the type of trade at the moment that I really want to be getting all that involved in. Look, we do have earnings scheduled. This is scheduled for the 15th of May. Look, if it changes, or at least if we begin to see more of an obedient stock, so to speak, I think a lot of the movements in HD have sort of happened, and we are pulling back down. Let me just see where we are with the 200 simple moving average. I mean, you can see for yourself 171, the Bollinger Band squeeze. I think we should leave HD personally. I think we've identified better trades. If we see it sort of fizzle back down here potentially, or even if it continues, we'll see what happens after earnings. But something, or if you wanted this in the top 12 list, I must say, look, I respect your opinion, I really do, but at the same time, I think we have other better sort of candidates, and I think I've walked through some of the reasons as to why that is, all right, on HD. Otherwise, the trend is still your friend, it's still up. You might just need to sit through a little bit of weakness, much like the market, as we're sort of, expecting moving forward. Now, pardon me, with FedEx, this is another stock we've identified. Again, when you look at these charts, I want you to look to the left, and I want you to see support and resistance areas. You can see the support down here at 230, so to speak, and you can see this resistance up here just above 250. It looks like it's coming in at 255. Now, clearly, we're just below resistance, and if I bring up these oscillators, I'm going to guess that they are beginning to turn down. And as you can see on my screen, the Stokes is turning down, RSI is at the midpoint line, and the MACD is still moving sideways. So this indicates, mixed with some of these candlesticks, you've got a series of at least inside day haramis, engulfing candlestick patterns. You've got spinning tops and also doji candlesticks mixed with dark cloud covers. You can essentially say that, look, for FedEx, if we do crack roughly this 240 pivot, 242, 243 area, there's a good chance we're coming back down to 235. However, that's not the trade I would be looking to place. Instead, I would wait for this to come on back down to 235. We've had 4 tags of this most recently, especially towards the back end of March through to, roughly 1/3 through April, if not half of April. And if we start to see those same candlesticks around that 235 pivot, there's a good chance that we oscillate back up to 255, but also eventually we should overcome this level and potentially run all the way back up to 275, 274. So that is the area on FedEx. It also, once again, surprise, surprise, aligns with that rising 200 and also those oscillators, which are going to move back down into short-term oversold conditions as well. Above all, you should see that we're in a consolidation. That consolidation is within the larger bullish upward trend. You can see that we're still making a series of higher highs and also higher lows. What you don't want to do in the world of trading is trade against the trend. The trend is your friend until it gives you definitive signals, again, that it has reversed. And that definitive signal is going to come in at about 225. You have to really start pushing below this candlestick just here. If you can do that, that is the first warning signal that we have definitively sort of changed the trend direction. Otherwise, it's going to be a break of this support area over here at about 215. I'm not expecting that, still expecting this support to hold and then to essentially bounce and take us back up to 250. So that is a little bit of analysis for now. I think I've actually moved through the top 9 list. I mean, Baba, Facebook, AV, DAL, LOW, PayPal, Abbott, FedEx, Home Depot, and Microsoft. I think we've moved through that. Again, I truly haven't made my mind up respectfully and politely as to which stock I want to put in that top 12 list. However, I am happy at least that we are sort of removing Goldman Sachs above all else at the moment. I think we've got, obviously, as you've just seen, some better types of stocks that really is just essentially more obedient and is still offering pretty decent setups. And I have gone back over the weekend, like I said I would, and back traded a ton of these quite significantly back in sort of historically speaking anyway. And I'm quite confident with really any of those stocks. I've given my reasons as to why I'm not all that sort of happy about Microsoft. And I think you can understand that. Again, go back and do it for yourself. You'll come to the same conclusions as what I have. And I also have personal experience, as I just said, having traded it a number of years ago through options as well. But from that list, look, I'm pretty happy with any of those stocks. I know I obviously can't sort of please everyone. I can't add 9 stocks into our top 12 list, so to speak, or at least come out with 20 stocks. I mean, it's just too much when we start also sort of recapping the markets in gold and silver and the US dollar, and sometimes the Russell and the transportational average too. So as I said at the beginning of this video, I think it's going to be best if I do sort of come back to these additional stocks once the trade setups are in the right location, and then we can sort of drill into more of them. I mean, obviously not all of them, but some of them are going to move into those areas and they're going to set up the trades moving forward. And I'll be able to give you a little bit more sort of additional information and analysis on those individual stocks, or that handful of 9 that may only come down to like 2 or 3 in a couple of days or weeks. And that's when we'll sort of go into the laser focus sort of analysis on those stocks as well. So sort of in a culling process. And yeah, I hope you enjoyed that anyway, the explanation, the logic and the reasoning behind doing so. So again, if you have any questions, please type them in below. I'm going to render this video. I wish you all a nice Tuesday session worth of trade. I'll see how the session goes on Tuesday. If not, I'll see you on Wednesday for a Wednesday afternoon market recap. All right, everyone? So enjoy your Tuesday. I'll be back with you in due course. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.